Good evening, everyone. I'm Mayor Shannon Glover, and I call to order the Portsmouth City Council Public Works Session Tuesday, January 12th, 2021. In accordance with Governor Ralph Northam's declaration of a state of emergency due to the novel coronavirus, Executive Order 51, on March 12, 2020, and the local declaration of emergency ratified by the Portsmouth City Council, and due to the coronavirus pandemic, which is continuing in the Commonwealth of Virginia. This called meeting of the Portsmouth City Council is being held by video conference on the 12th day of January 2021 without a quorum present in the City Council chamber in order to reduce the likelihood spread of the coronavirus in accordance with the City Council Ordinance 2020-21 and 2020-102. Each City Council member is participating from their home or other remote location, and I am in the City Council chamber. We have with us today our interim city manager, Mr. LaVoris Pace, who will proceed with the meeting. Mr. Pace.
Thank you, Mayor. Mayor, Vice Mayor, members of the City Council, good evening.
I think you're on mute.
Good evening. Thank you, Mayor. Mayor, Vice Mayor, members of the City Council, good evening. The Portsmouth Retirement Actuarial Report. Tonight's presenters include Landon Moore, Chairman of the Portsmouth Retirement Board, Andre Stewart, Head of the Defined Benefit Consulting with John Hancock, Brian Birnbaum, Senior Vice President of Greystone. Welcome, gentlemen, and good evening.
Hey, this is Landon. I'll thank you, Mr. Pace, for the introduction. I just had a few remarks before the formal presentation by Ms. Terry and Greystone and John Hancock. First of all, thanks, Mr. Mayor and council members, for inviting me to the meeting, and welcome new council members. I just wanted to say I've had the pleasure of serving on this board for several years now, and most recently over the last year as the chair. And I'd like to just comment that my professional career at Smithfield Foods translates directly to my role on this board on a voluntary basis. I am responsible for managing the pension program at Smithfield, which very much is similar to this public plan, but on a corporate basis. And before turning it over to the sort of formal presentation, I just had a few other remarks I'd like to make, if that's okay. The Portsmouth Retirement Board are the trustees for the Portsmouth Fire and Police Retirement System and the Supplemental Retirement System. The Board of Trustees carry out its functions solely in the interests of its members and beneficiaries. The board's responsibilities include, but are not limited to, establishing and maintaining the statement of investment policy, implementing investment strategies that are reasonably expected to allow retirement systems to fund benefit obligations, oversight and monitoring of investment managers, and hearing appeals as it relates to eligibility for those retirement benefits. The board has an investment committee that is responsible for ensuring that investment strategy is consistent with the investment policy and consistent with the system's goals and objectives. The Portsmouth Retirement Board has retained Greystone Consulting as a discretionary investment manager to administer and manage the funds of the retirement system under the guidelines established in the investment policy. Greystone is responsible for constructing and implementing a portfolio to reflect the strategic asset allocation and risk tolerances described in the policy. The portfolio primarily consists of a mix of global equity securities, U.S. corporate and treasury bonds, and real estate investments. The portfolio is designed to achieve annualized returns of 7.25% over a long-term time horizon. Recent returns have exceeded this expectation. However, given the underfunded status and maturity of the plans, investment returns alone are not enough to fund all of the future benefit obligations. Continued support in way of future contributions from the city will be needed to supplement the investment returns. The Portsmouth Retirement Board has also retained John Hancock to provide actuarial consulting, ongoing administrative and record keeping, and other services required by the retirees. Brian Birnbaum from Greystone is here to provide additional detail on the investment portfolio construction and performance, and Andre Stewart from John Hancock is here to provide detail on the benefit obligation. Also, the Portsmouth Retirement Board are trustees for the trust established for the purpose of accumulating and investing assets to fund other post-employment benefits, also known as OPEB benefits. And that concludes my statements. Again, thanks for inviting me here, and again, welcome new members. I'll turn it over to Ms. Terry now for the formal presentation.
Oh, I'm sorry. I was just talking. Good evening to the Honorable Mayor, Vice Mayor, executive members, and others. So I'm here this evening to give you a quick presentation or overview of our retirement system. We have new members of council, and I thought that this would be a great opportunity to introduce you to the retirement board and our investment group. So I'll begin. The retirement board has a regular schedule of meetings to include investment manager, which is Greystone, which Mr. Moore just spoke of briefly, briefings by the record keeper and actuary, which is John Hancock. The board consists of 7 voting members, 1 retired employee, 6 employees and or non-employees, financial and investment experience and knowledge, 2 non-voting ex officio members, which is the chief financial officer of the city and the director of human resource management for the city. Next slide, please. This slide just represents a breakdown as to who the members are representing each board. So you have a chair for the board member, which was Mr. Landon Moore, who just briefly gave an introduction for himself. David Holly, which is the vice chair. You have Danny Covey, Mark Gardner, my apologies, Joel Hawkins, and Mark Munson. So the ex officios are the people who represent the city, which is the new human resource director, Demetrius Wright, along with myself, the CFO. You have others that are representative for the city, which is Mayor Shannon Glover, the assistant city attorney, Derek Challenger, and a consultant we have, Patty Phillips. Next slide, please. So outside support of the Portsmouth Retirement Systems, again, we have Greystone Consultant and John Hancock. The role that Greystone plays is a global leader in the institutional consulting business, bringing forward strategic investment solutions, part of the Morgan Stanley investment management for the retirement system. And Mr. Brian Birnbaum is actually the Senior Vice President of Wealth Management, who will actually come and give you a quick, brief presentation for his role and what he does with Greystone. And then you have other members. So with John Hancock, they are one of the largest full-service retirement plan providers in the industry, record keeper, consultant, and actuary for the retirement system. in which we will have Andre Stewart at some point to pick up his portion of the presentation, who is the assigned actuary and head of DB consultant. Next slide, please. So one of the things that I wanted to address as of July 1, the retirement system is the expected value or percentage that we should have funded for the retirement system should be at 80%. I want to just remind everybody that we have 3 retirement systems here at the City of Portsmouth. We have police and fire system, which is funded at 69.86% of the 80% where we would like to be considered whole. We have an asset actuarial value of $162.6 million, and we have actuarial accrued future liability of $232.7 million. We have the supplemental systems, which is funded at 72.97%, where you have the asset actuarial value at $54 million. You have the actual or actuarial accrued future liability at $74.1 million. And again, VRS is not here, which is the Virginia Retirement System, but we also fund our Virginia Retirement System as well as these 2 supplemental plans. Next slide, please. As far as the active participants in this closed system, as of July 20, there were 1,057. You actually can see the breakdown of how many active and vested employees or retirees that we have. And then you have how many are still in the supplemental system. So altogether, we have 1,057. And this is, again, a closed system with these active number of employees that we provide this benefit for. Next slide, please. So just in a conclusion, the retirement systems have benefited from new discretionary investment management and approved asset allocation. And that's basically based on performance, which is quite strong at 15.6%. And we are looking at this at a calendar year basis. The city refinanced its pension obligation bonds in order to fund the retirement system of $129.3 million in August of 2019, which resulted in an $8.9 million over a 3-year period savings. All savings are planned to be transferred to the retirement system. So what we did, we took out and refinanced to make sure and put the money back into the retirement system for funding purposes. It established that the systems would be approximately 74% funded in 2028. The value of the portfolio as of January 8th, 2021 is $239,666,987. With a long-term goal of 80% funding, which is where we need to be, the actuarially calculated annual contribution from the city is over the next 16 years will increase in order for us to become 80% funded. There will be an increase in the contributions or what we need to actually contribute into this fund. As shown by the next presenters, annual benefit payments exceed the annual city contribution and investment earnings. So over the long run of the system, we will continue to be monitoring the system. In addition to making contributions to the retirement system, the city's general fund pays all costs associated with the pension obligation bonds. In fiscal year 20, debt service was about $5 million. However, by 2024, the annual payment will be $10.9 million. As of June 30th, the pension obligation bonds was $146.7 million. Now, this just concludes my portion of the presentation, but we will have the actuary, Brian Birnbaum. I don't see you, but I know you're there. Oh, there you are.
I'm here.
Okay, if you would, I'm going to turn over this portion of the presentation to you.
Great, thanks, Mimi, and good afternoon, Mr. Mayor, Vice Mayor, and City Council members. It's a pleasure to be here with you on a computer screen, and hopefully this time next year we'll be able to be together in person for another update. I'm just going to spend a few minutes talking about investment results, which is what we're responsible for. If I can have the next slide, please. Just a quick snapshot and an overview of who Greystone is. We've been around advising the needs of institutional investors since the early 1970s. I've been in this business for 26 years, started in the early to mid 90s. As was mentioned by Mimi earlier, we are a wholly owned subsidiary of Morgan Stanley. And again, our sole focus is helping institutions such as the Portsmouth Retirement systems, developing customized asset allocation strategies, putting portfolios together, and investing those assets to generate returns that are required to meet their obligations in the future. If you looked across all of Greystone, we consult to about not quite 350 billion in institutional assets, about 335 here. Can I have the next slide, please? We touched on this last year when we spoke to the council, in that our role as advisor to the retirement board has evolved over the years. We started in 2012 in a very narrow mandate where we were responsible for providing updates on a single investment manager that the city used at that point, the retirement systems used. And over time, and working with the staff and the retirement board, our role and responsibility increased to the point where in the fall of 2018, as was mentioned by Mr. Moore earlier, we were hired through an RFP process as the new discretionary investment advisor for the retirement plans, the effective date of that being October 31st of 2018. Can I have the next slide, please? Here is a quick snapshot of how the assets at a very high level are invested. You can see that, as Mr. Moore suggested, we invest predominantly in publicly traded equities, both here in the United States and outside the United States, bonds, treasuries, corporate bonds, mortgage-backed securities, and this little bit of alternative investments is largely real estate investments. But in broad asset categories, we have about 70% of our portfolio invested in public equities, 25% in bonds and alternatives. This was a big focus of ours early on after we were retained as the new discretionary investment manager, is to get broader diversification and risk controls embedded in the program. And we've certainly done that. We've done that by using a mix of both active and passive managers. We have very broad style diversification and balance. And we consolidated a number of the investments that the city had historically into what we would consider top tier institutional quality active managers. And by the point that we're the discretionary investment manager, as Mr. Moore alluded to, we operate within the confines of the investment policy statement that was established by the retirement board. But we do have the discretion to change the composition of the portfolio around based on our outlook. And just to give you a sense, we were doing just that in the coronavirus declines that we saw in March and April of this year. We took that opportunity to adjust a number of our equity exposures to capitalize on what we felt was the coming recovery. And we initiated a position in high yield bonds. Both of those activities were very timely and worked very well to the city, for the city and the retirement plans. And we'll talk about results in a second, I promise. The last thing I want to say on this slide here is that if you looked at the underlying investment management fees of the overall portfolio, it's less than 0.5%, 0.4%. And there's a recent survey out by the National Conference on Public Employee Retirement Systems, which shows that the average fees, underlying fees paid by other public retirement systems around the country is closer to 50 basis points. So we've been able to achieve the results we're going to talk about and achieve this broad diversification and risk control. And we've been able to do it in a very cost-effective way for the retirement board and for the city. I have the next slide, please. This is an update of a chart we showed last year as well. This looks at the plan year performance of the retirement system going back to 2013. And the way to read this chart is for each year that's shown on the left-hand side of this page, the return that's shown would be the 12-month period ending June 30th of that year. So if we go all the way down to the bottom row of this slide, the 5.1% return would be the 12-month return ending June 30th of this year. I'm sorry, of 2020. That is the plan year of the retirement systems. It's very common to have plan years that are different than calendar year ends. But I would say to you, although we need a plan year for the actuary to do its work and to value both the assets and the liabilities, plan years are somewhat arbitrary, and the capital markets may provide strong returns or maybe less than strong returns for a 12-month period ending 2020, for example. And that's certainly the case of what happened for the plan year that ended June 30th of 2020. Not surprisingly, the declines we saw in the first quarter of 2020, consistent with the the spread of the coronavirus, those results figure prominently in those numbers. But as we are going to show you on the next slide in a second, I wanted to give you a sense as to how the recovery transpired and the impact that had on the results that we were able to generate. The only other thing I would say on this slide is, although the 5.1% for the plan year ending June 30 of 2020 was below the 7.25% assumed rate of return, it was substantially better than what the overall markets provided. So we show a custom benchmark here, and if we took a blend of 75% of global stocks and 25% in bonds and in real estate, and we came up with what return that might look like. It was 4%. So we were able to generate, because we made certain moves in the declines that we experienced in the early part of this year. But in addition to that, we've had some very good managers that have been able to beat the market. So those two things in combination enabled us to beat the overall market, to beat our benchmark by over 1 percentage point. And this is net of all fees and costs. So if we can flip to the next slide, and I'm happy to answer any questions that you have. I just wanted to give you a sense as to, again, this arbitrary nature of a plan year, looking at results ending June 30, show you what the difference 6 months can make. So if we looked not at plan year results, but instead calendar year results, in 2020, we were up about little over 15.5%, 15.6%. That benchmark was up 13.7%. Again, that 75-25 stock bond mix. So those moves that I talked about, and the fact that we have discretion to operate within the confines and the controls of the investment policy statement, in addition to having some very good managers in the program that were able to generate some better than market returns, enabled us to outperform our benchmark by almost 2 percentage points in the calendar year 2020. We show the 2019 calendar year results as well, and you see a very similar picture, up over 23.5%. Our benchmark was right around 21.5%, so another 2 percentage points of returns that were better than what the markets provided us. And if you looked at that period where we were retained as the retirement board's discretionary investment advisor, we're up 16% a year. Our benchmark was a little over 14%, so a little bit more than 1.5 percentage points per year of excess returns. Let me just make a couple other comments on this slide. The 2019 calendar year result was particularly strong. We have access to a universe of the returns of other public retirement systems across the country, and I was looking at it before I jumped on this call. For the calendar year 2019, the data isn't available for 2020, which is why I can't tell you what it is yet. But there were 641 public retirement systems in the country that were reporting performance into this universe or into this firm that compiles the data. Our 23.6% return was among the highest that any public fund generated throughout the country. In fact, if you looked at the top 5% of results, the top 5% of results was 22.4. So our 23.6 was in the top 5% of returns that were generated across the country. I suspect to see a very similar result in 2020 when the data becomes available. And that just gives you some context around how strong of years, despite what we lived through earlier this year, but how strong a year 2019 was and how strong a year 2020 was. If I could put those percentages in dollars, in 2020, that 15.6% return equates to about $34.5 million more that we have in the trust funds and the retirement plans because of those investment returns. In 2019, it's over $43 million. So let me just stop there and say, the results are very strong. Our objective here, as Mr. Moore talked about, is to build a portfolio that's going to generate 7.25% over the long term. We've certainly been able to do that since our mandate changed in the fall of 2018. And with that, I'll stop and see if anybody has any questions.
Okay, Brian, if no one else has questions, we're going to go to Andre.
I have my hand. Oh, Andre has a question. I'll wait.
Oh, no, my apologies. Andre is the next presenter as part of this overall presentation for the portfolio.
Yes, I had questions. I raised my hand. Are you guys not seeing me?
I did not see you. Am I at all?
The citizens don't usually see me either. But I'm here and I'm raising my hand.
Mr. Battle, the mayor stepped away for just a second. You can move forward with your question.
Yes, ma'am. We borrowed funds a few years ago that brought us up to over $200 million. After a few years, specifically last year, we were at $162 million in that fund. And we had gone from 79% or 80% to the current percentile that you're seeing now. But in the actual money, we're saying that we have $162 million. And then we're saying that we did $34 million worth of investment improvements. So, and then you said something about $43 million in investment improvements. But that doesn't equate when we're still at $162 million. And we're still putting in $5 million a year to subsidize it, the retirement system. And the projection is that we're going to be putting in $10 million in the future. And so I'm kind of confused here. With the last meeting last year, we were at 162 million. And I'm seeing that now. Yet we're talking about all these improvements in percentiles, but they're not equating into funds. And
I'm happy to address the question, and I apologize, Councilman Battle. You may have cut out at the end, so I didn't get all of your question, but I understand where you're coming from and the point you're making.
And Brian, just so you know, I'm going to cover some of that in my material, so you can absolutely defer to me if you like.
I'm happy to, Andre. Let me just say this, and we'll get into it in a second. I think as of the end of the year, the value, the assets, the market value of the assets we had in the retirement system was about $239 million. There is a difference, and Andre will talk about this, between market value and actuarial value of assets. So that's number one. Number two, we spend in benefit payments net of contributions. So the money coming out of the retirement systems to meet the benefits of our beneficiaries of right around $29 or $30 million a year. So even though in 2020 we generated $34.5 million in investment gains, about 30 million of that went out in the form of benefit payments. So you can see the closed nature of this plan. The cash flow that's coming out for benefit payments is a significant percentage of the overall value of the plan. So it's going to take very significant investment returns to see the trust fund grow in assets. But at the same time, that's not the ultimate goal, because it's going to be investment returns plus cash contributions that are going to meet the benefit payments of the beneficiaries over time. And I know Andre is going to get into a lot of issues around funded status and our expectation over the coming years as to what happens with funded status.
Yeah, and I'll just point out that even though the benefit payments are pretty significant, they're drawing down not only the assets, but they're also drawing down the liabilities, which are what are owed and what you're trying to fund for. So the benefit payments being significant, while it is a challenge from an asset perspective, it is actually lowering the liability and doesn't necessarily have a negative impact on the overall financial health of the systems.
And Andre, this is Mayor Glover. Basically, for me to simplify for myself, we do have more participants drawing out of the fund, even though we earned a considerable amount of interest in what you guys have done from the investment side. The amount that folks are taking out exceeds the amount of our gains. And
sorry, Mr. Mayor. Yes, that is the case in just about every year. I've been working with the system since 2009. You'll see in a few slides, there have been years, in particular, I think 2017, where the return was 11%, far in excess of the target 7.25%, and the asset levels barely held steady with that 11% return. So that really does demonstrate the significant impact that the benefit payments have on the asset levels and the need for the long-term contributions into the system in combination with the asset performance.
Understood. Thank you for the clarification.
Sure.
Mr. Mayor.
Mayor, I have a question.
Yes, Councilwoman Lisa Lucas-Burke.
Right. Thank you, sir. They mentioned that the long-term goal of the 80% funding over the next 16 years will increase. But I guess maybe for our city staff, how do we plan for the increase, and where do we get the additional funding? I know the investments will be on the Greystone consultant, through our consultants. But what can we do to slow the process or change the process so that we are in track with our 16-year goal of meeting the 80% funding? Or does that change if we don't meet the goal? Does the time expand out? Does the figures change?
If you will allow me to speak. Yes, ma'am. So what we have done to better prepare ourselves for this is that when you hear us say we've refunded and refinanced bonds, pension obligation bonds, we take the savings from that and we put that back into the system. We have a plan of action now that we are paying back and paying into the system dollars to incorporate this into the retirement system for long term. So each year we make a determination of, you know, what do we need, how much we can afford to fund it. I think last year we had a plan, we put $6 million back into the system from the savings that we had. This year, since I've been here, we put $4 million. And so I think it's a 10-year, and I don't quote me on that, but I know that we have a schedule of funding for the system. And we have to continue to fund this system with any dollars that we have in play. So we are constantly working to ensure that we have enough funding to cover any retirees that are in this closed system. I hope that answered your question.
Thank you, Ms. Terry. Council Member Battle.
Ms. White, am I being received in the meeting? I was cut off. I came back on, and I wasn't able to finish. I mean, are you guys receiving me? Do you? I'm wondering.
We see you, sir.
Okay.
And you're back. Well, you're back online.
Okay. Thank you so much. Well, what is the actual payments that go out for the retirees?
Unfortunately, Councilman Battle, I apologize that I don't know how you got cut off, but we did discuss that. So right now, basically, when you mentioned, we have investment.
No, ma'am. What I said was, what is the actual payments for the retirees?
Yes, sir.
That's all I asked.
Okay, so you mentioned we have 24 million coming in and 29 million a year coming out.
No, ma'am.
29 million.
What are the actual payments that go out to the retirees?
29 million.
Okay. What are the actual payments go out for those folks who handle our retirement system?
Less than 0.5%.
No. Can I get some figures?
Right off the bat, I think we can speak to that. Let me get to the right slide.
See, as council persons, we're responsible for policies and money. And although we get percentiles and although we get estimations and those sort of things, the bottom line for us is, what is it costing? You see, we can only deal with money with figures, not guesstimates, not estimates, not percentiles. And again, when I see 162 million falling to 200, and we're putting 5 million in a year and projection to put 10 million in the future, we're playing a Ponzi scheme here.
Hold on, Ms. Terry. Excuse me, Ms. Terry.
Thank you.
Hold on, please. Councilmember Battle. We have consultants who bring this information to us, sir. And hold on. May I finish, please? May I finish, please? May I finish? The purpose of these consultants, they work on our behalf, and the figures that they're bringing is based on the information that they get from us, and they compile the information. And we're not doing a Ponzi scheme. What we're doing is we have professional consultants who bring to us the information, and the information that they present just like in any other financial presentation, is the information that is standard in the industry. So I would just ask if you have specific questions related to individual circumstances that we go back to that, because we have more presentation. I don't believe Mr. Stewart had an opportunity to finish his presentation, and I think that may make some of the things clear, sir, that you are asking. So,
and I understand that you're representing them, but I'm representing the people. And I want to know figures. Now, we can move on because everybody's in a hurry, but I like to know exactly what we are spending of the people's money, killing the fuzz, taking that out. So if you want to just move on, let's move on.
yes, I would ask that we move on.
But it's something deadly wrong when we fall from 200 plus million to 162 million. We're putting in 5 million a year. You're estimating I'm going to put 10 million in to be able to maybe catch up 10 years from now. So now we can move on. But
Mr. Battle,
I'm representing the people.
I understand. I believe we all are representing the people. So let me make that clear, sir. We are all elected to represent the people. So my interests are to represent the people as well. In the interest of time, if there are specifics, we can have an individual meeting with you and our consultants and our CFO to certainly drill down on your questions. But at this time, it is in the interest that we move forward. And I would ask Andre Stewart to come forward, because I know that I don't believe he has gotten done with his presentation.
Great. Thank you, and good evening, Mr. Mayor, Vice Mayor, City Council. As the actuary for the retirement systems, I am tasked with calculating various financial measures. Most important among them is the actuarially determined contribution, or the ADC. If we can move forward one slide, please, that would be great. So I've prepared a couple slides for each of the systems, which provide an overview of the financial health. The first is a projection of key financial metrics, including the actuarially determined contribution and the funded status. The funded status is the percentage of liabilities that are covered by assets on hand. And the liabilities are the present value of all benefit payments that are due now into the future. So you can think of the liabilities in terms of a mortgage payment, where the benefit payments are similar to that monthly mortgage payment, and the liabilities are akin to the outstanding balance on the loan. So the last row of this chart and the blue line in the chart represent the funded status, and currently the assets cover 70% of the liabilities, and this is specific to the fire and police system. So that 30% gap is going to be narrowed over time, primarily by asset returns and contributions from the city into the systems. These projections assume investments will return 7.25% per year over the long term. Some years, assets are going to outperform our expectations. Some years, they'll be less than 7.25%, but over the long term, we expect that the investments will perform consistent with those assumptions. So, however, investment returns alone are not going to be enough to fully fund the benefits that are due in the plan. That's where the ADC, or the actuarially determined contribution, comes in, and that's represented by the green bars here. And this amount, and specific to the fire and police system, we expect it to be $7 to $8 million per year over the next 15 years for the fire and police system. And I've heard mentioned too, over the next 16 years, the target being 80%. You know, many financial systems use 80% as a bogey and as a measure of health. And while that might be the case, if the city follows the recommended contribution levels, the plan will be 100% funded, expected to be 100% funded within the next 16 years. So the combination of that investment performance and contribution is what will allow us to get to that 100% funded threshold, hopefully by 2037. If we can flip to the next page, we see a similar story for the supplemental system. It's currently funded at 73%. We do expect that funded status to decline, and that's really before rebounding, and that's really a function of the benefit payments, as Brian alluded to. And the next slide, if we can move to that, really demonstrates how significant the benefit payments are and the importance of the annual contributions as well as robust returns to the health of the systems. So this chart depicts the cash flows for each of the past 5 years. The positive amounts, or the bars above the line, represent asset inflows. Those being investment returns represented by the highest green bars, all of which were positive in the past 5 years. And the contributions are represented by the aqua colored bar. Now, below the line are the outflows primarily, and namely the benefit payments, which you can see are quite significant for this plan, typically in the $22 million range. The net cash flow is represented by the red transparent bar, and that's been below the line in every year except for 2017. In 2017, the investment returns were 11%, well above that 7.25% assumption, and the assets barely remained level year over year. So this really does paint the picture of how important those annual contributions are, as well, because it's really a long-term financial commitment being the sponsor of a retirement system. So you gotta, while we're going to rely on those investment returns, the contributions are just as important, maybe not more important, in order to maintain a healthy funded level, particularly when we look at the amount of benefit payments that are drawing down that asset level. So Councilman Battle, I think this slide might address that concern around there being, talk of really positive investment returns, but we still see the asset level declining. It's going to take extraordinary investment returns still in combination with contributions for the asset levels to not to erode. But as I referenced previously, the asset levels declining is what's actually anticipated. It's really the funded status that's going to be a measure of the financial health of the plan. As the funded status increases, that means that the system has more and more assets to cover the benefit payments that are due to each of the retirees. The next slide just shows a similar story for the supplemental system. But if there are any questions related to this or anything else related to the actuarial results, I'm happy to answer them.
Mr. Mayor.
Yes. Dr. Whitaker, you have the floor, sir.
Yes. If not tonight, at our next meeting, can we get some information on the fire and police system, looking at the amount of investment? How many in fire and police are currently in this system because it's closed? And also, what is the average age? If you could get that to us as a follow-up at our next meeting, that'll be fine. And,
yes, sir.
And in addition to that, to the issue that Mr. Bowder was raising on the cost, at our next meeting, can you get us some disaggregated data on what the cost entails? Because what we're looking at are just whole numbers. We're not getting a breakdown of what that cost entails.
I can address the question about the average age. The average age for the fire and police system is about 67.
67.
Yeah, and this is as of July 1, 2020. We do, as Brian mentioned, myself as the actuary, we do the valuation in conjunction with the plan year. So as of July 1, 2020, the average age was 67. The total number of participants was 686. The bulk of those participants are retirees and beneficiaries, those that are receiving payments at 633.
So 633 have already retired and they're receiving benefits.
Correct.
Okay. Thank you.
And excuse me, Andrea, some of that information, I may have overlooked it. Was that included in the presentation previously?
I think the number of participants was included earlier in the presentation. It might not have been as of July 1, 2020. I'm
Right.
just looking at a separate report. I don't believe
Okay.
the average age was included, though.
Thank you. Thank you for clarifying that. Okay, would you, are there any other questions for Andre?
Mr. Mayor,
Yes, Vice Mayor Barnes, I believe.
could we also get a breakdown of who's getting what to be disseminated between the council members?
When you say who's getting what do you mean specifically, sir?
Well, as far as the funds that have been sent out to the individuals, which departments, who is actually getting those payments?
Well, I think Mr. Stewart alluded to who is receiving those payments. They're beneficiaries, employees and their beneficiaries. Maybe I'm missing that. Can you address that, Andre, please?
Yeah, I can try to, certainly. So there are very few active employees. So these retirees obviously have worked for the city. So Mr. Barnes, are you trying to tie back to which department these retirees previously worked with?
Yes, sir.
Okay, I think we can do that.
Very good.
And Mr. Mayor.
Yes, Dr. Whitaker, you have the floor.
Yeah, the 633 figure that was given, that's retirees and some may be spouses as well.
That's correct.
Okay, all right.
Yes, Councilmember Battle.
Can I get a breakdown of those who have retired and the exact expenditures that go out to them? And then I want the exact expenditures that go out to the agencies that handle the retirement systems investments. Thank you.
Are there any other questions for Andre?
Mr. Mayor, that wasn't a question, that was a request.
I understand that. I think that request has been duly noted, sir.
Thank you.
Are there any other questions for Andre? Andre, do you have anything further to cover, sir?
I do not, Mr. Mayor. I think there are a couple more slides that Ms. Terry may be covering.
Okay. Well, thank you again for your presentation.
Thank you, sir.
Ms. Terry?
If Ms. White, could you please move to slide number, I think, 21? So this is the plan expense overview that has been in question by Councilman Battle. So this is an overall breakdown, and I guess that we can provide even further breakdown of this for overall amount of what we actually spend with the plan administrators. So it's 1.232 million total overall for the two plans fees, which is less than 0.5% of the investment. But we can provide additional figures based on your request as we move forward. And Ms. White, that's it for me. If you could go to the last slide for questions, and I think we've kind of alluded to those particular questions which the council has asked.
Councilmember Battle, you have the floor, sir.
Right now, are those figures for the year, or are those figures that little 0.5% for a quarter?
This is an annualized percentage. It's an annualized dollar amounts that are projected on a go-forward basis, an estimated basis on average assets held for the quarter ending 9/30. So it's as of 9/30, but it's overall, it's ongoing. It's not just for one particular quarter, it's up through, as I should say. What do you, clarification, through since the program began, since the infinity, it is through 9/30. Well, so it's not for one particular 3-month quarter, it is from beginning to that period of time.
Well, I got a document last year that they were paid in increments, in quarters, and that the total for the year was $5 million per year. So I'm kind of confused when I get one thing 1 minute, which was the actual printout, and then we have another situation here. But we'll clear it up, I'm sure.
Okay.
Thank you.
Once you bring me the expenditures for the retirement system, and then the expenditures for those folk implementing it.
Thank you, Councilmember Battle.
It's three different layers of implementation here, and each layer it's being paid. So was that one layer you showed me, all three? But we'll get it straight in the future. Thank you.
Yes, we will, sir. And so, Ms. Terry, you have gotten all that written down as we proceed?
Yes, sir, I do.
Okay. Dr. Whitaker, you have the floor.
You're on
You're
mute,
muted,
Doc.
sir. You're muted, sir.
Yeah, there you go. The presentation that was just given, is that in our Dropbox? Is that information in our Dropbox?
Yes, sir.
It is, okay.
It is in the Dropbox, sir.
All right, okay, thank you.
Uh-huh. So if all minds are clear, I want to say to Mr. Birnbaum and Mr. Stewart, thank you for your presentations, the detail, and thank you also for the work that you do on behalf of the City of Portsmouth.
Thank you very much.
Thank you.
And Madam Clerk, may we call for the roll at this time, please?
Yes, sir. Mr. Barnes. This is just a roll call. We didn't do it at the beginning.
This is just a roll call. We didn't do it initially, so now we need to call for the roll. Make sure everyone is here.
Here.
Mr. Barnes, thank you. Mr. Battle.
Here.
Mrs. Lucasberg.
Here.
Mr. Moody. Mr. Moody, you're muted.
I'm here. Thank you.
Thank you.
And unmuted.
Thank you. Dr. Whitaker.
Present.
Mr. Woodard.
Here.
Mayor Glover.
Here.
Thank you.
Well, thank you again, Mr. Pace.
Thank you, Mayor. Mayor, Vice Mayor, members of City Council, Davenport and Company is the city's financial advisor, having served in that capacity well over a decade. David Rose, Senior Vice President and Manager of Public Finance, and Kyle Locks, Senior Vice President, will present a brief introduction and financial status update as the city works through its budget, and capital planning. The presentation will also highlight key takeaways with respect to Portsmouth's strong investment grade and credit rating, which are critical to Portsmouth's ability to fund capital projects at the lowest possible cost. Mr. Rose, good evening, sir.
Good evening, Mr. Pace, Mr. Mayor, members of council. I appreciate the opportunity, along with my partner Kyle Laux, to present to you. We will not be very long, but again, please interrupt us as necessary. We look forward to trying to answer any questions. If we can't, we certainly will get back to you as quickly as possible through Ms. Cherry. Let me start by saying that if we just turn to that first page, if you would, roll the city, that the city's finances are in sound shape. This is meant as an education only, and we would just like to, particularly for some of the new council members and Dr. Whitaker, who's back again, congratulations, to just give a little perspective on what Mr. Pace indicated, which is credit rating, the importance of that, and where you stand as it relates to your credit. So with that being said, we routinely have the opportunity to be in front of council. I must admit, we do it typically away from pandemics, and we're in front of you and get an opportunity. But tonight, hopefully you can hear us and again, make the best of it. With that said, the city regularly interacts with the rating agencies, of which there are 3. Kyle will go over that. But in all instances, you are highly rated and highly respected for the way in which the city has carried itself over the last several years. With all of that, and because you enjoy such good credit ratings, you've actually been in a position to find that when you do go to the marketplace, you have been able to get interest rates that are such that we have saved, we meaning the city, some $40 million over the last several years with reducing your interest costs from when you initially borrowed money. I would point out, as Ms. Terry said, part of those savings are tied directly to the pension bonds that were originally done. And as a result of that, those dollars that you saved are plowed right back into the overall pension portfolio to further help with making those payments over the next several years. We wanted just to also tell you what we don't do, and that is we don't determine which projects to finance. We don't tell you how to do those things per se. We just try to give you some recommendations to be most cost effective and most flexible. That said, we've identified, and you'll hear this again from Kyle, some $50+ million of debt outstanding that if interest rates hold, meaning stay roughly where they are, you'll be able to save several millions of dollars in both the general fund and your utility enterprise fund. And all of that will further help, if it works, keep rates down, for example, for ratepayers, and at the same time provide some extra dollars to do those things that you have with regard to the general fund. Tonight, again, we're just here to educate, so I will be quiet. I'll turn it over to Kyle, and we'll try to answer questions, Mr. Mayor, as you deem appropriate with your council members. Thank you.
Thank you.
Okay, if we could go to the next page. Mr. Mayor, members of council, nice to see everybody this evening. We'll just take a couple pages. We're not going to go line by line, but as David mentioned, we thought it'd be a useful kind of refresher for many of you that have been on council, and maybe a little bit of education for those of you that are new to council in terms of what the city's credit ratings are and why they matter. And so Portsmouth has 3 credit ratings: Moody's, Standard & Poor's, and Fitch. You see those at the top of the page. And those are the 3 primary outside independent agencies that provide credit ratings to a city like Portsmouth. They're important for any variety of reasons: economic development, and importantly, when we go borrow new money or, as David mentioned, refinance existing debt for savings purposes, they help us achieve the lowest possible interest rate. So we can go to the next page.
So again, we mentioned we have 3 ratings, and here's what those ratings are. Moody's is a AA2, S&P is a AA, and Fitch is also a AA. They were all basically reviewed within the last year or so, and so these are very fresh in that sense in terms of the outside independent review. They're all very strong, and we'll show you if you go one more page, Ms. White. You see where your credit ratings fit in relative to the overall credit rating scale. Again, each of these entities are independent. They do their own assessment. But we happen to be, as you see those tiers there, in the very strong category for each of the 3 independent agencies. And in fact, we are just 2 notches away, that's what they call it, 2 notches away from the very top credit rating possible, which is a AAA. So that's a marker and a benchmark. The city's been well run from a financial perspective historically, as David mentioned at the outset. And we'll give you a couple details here in the next couple pages on what it is the rating agencies are looking at when they're providing those independent outside assessments. So if we go to the next page. So there's really 4, if we want to simplify it a little bit, it's a little more complex than this, but if we want to simplify it, there's basically 4 primary areas that the rating agencies are looking at when they're providing those credit ratings. The first one is the economy. It's arguably the most important. It's also arguably the one that you have the least amount of day-to-day control over. Certainly through economic development, you work to impact that over the long term, but it is the one that you as a council likely have the least impact on a day-to-day basis. So that leads you to the bottom 3, and those are things that you as a council, working with your senior management, have a lot of control over on a day-to-day basis. The first one is finances and fund balance. That makes up about 30% of the credit rating, and so you'll hear us talk about, and those of you that have been on council in the past, and certainly listening to your CFO, that finance piece of it is very important. You have a policy with regard to that, and we'll talk about that at the end of the presentation. Debt and long-term liabilities is also an important piece, albeit less important than many people I think would maybe think about at the outset. It equates to about 10 to 20% of the rating, again, using some very broad brush discussion topics here. And lastly is the management piece. That piece is arguably maybe the hardest to quantify. But Mr. Mayor, what that really means in terms of management is they're looking to see, do you as a city have structurally balanced budgets? Meaning, do you have revenues that cover your recurring expenditures? Do you have financial policies? Do you follow those financial policies? All of those things are things that the city has arguably been able to prove to the rating agencies and demonstrate year over year that you've been able to do, and they'll continue to be important going forward.
Thank you.
So if we go to the next several slides, give you just hopefully a little bit of a taste of what each agency said the last time they did their relatively detailed review in terms of public reports. And again, these are just snippets from publicly available reports. Moody's, for instance, does a nice job of giving us a series of factors that, in their view, could lead to an upgrade, meaning an increase in our credit rating, or a downgrade, meaning a decrease in our credit rating. And what they say there, first, under the upgrade, is, and it leads right from your prior conversation that we appreciate being able to listen to, which is our ability to maintain an adequately funded pension program without budget or balance sheet deterioration. So that is a primary consideration with respect to the rating agencies and what they're looking at. They also talk about tax base and growing that. We know that ties back to economic development, having good financial performance, and again, watching that debt burden, which is something that we watch closely with the CFO and staff in terms of your policies. Lastly, in terms of what could lead to a downgrade, certainly something we all think we want to try to avoid, and Moody's does a good job of giving us some of those things up front. And again, first and foremost, they say right there, inability to sustain and improve funding of our pension plan, so they're watching that closely. They talk about a reduction in reserve levels that could result in a downgrade. And then again, increasing the fixed cost and debt burden or tax base contracting. So it gives us just a couple snippets as you're working through your budget process, Mr. Mayor, members of council, to keep in mind in terms of what matters to them. So you go to the next page. S&P, a little more wordy. We won't read this word for word, but basically give us a nice upside and downside scenario. Basically talk about how economic development is important to them as they talk about wealth and income levels, while keeping all other factors constant, meaning making sure we have structurally balanced budgets, making sure we have very solid fund balance, et cetera, et cetera. Downside scenario, again, they talk about if we were to draw down our reserves substantially, that could lead to, in their term, a downside scenario, aka a downgrade. So again, something that you haven't done historically, but one we want to keep in mind. So if we go to the next page. The Fitch commentary, maybe least wordy of all, but what they really say there is the AA rating from Fitch is based upon their expectation that the city will maintain a high level of financial flexibility. Again, talking about a healthy reserve cushion, ample revenue raising ability, and a moderate fixed cost burden, which really ties back to our debt and our pensions. So we've got some themes here, Mr. Mayor, members of council, between the fund balance, the debt and the pensions, and the economic development side of things that are very important to the rating agencies as they come up with these credit ratings. Okay, so you go to the next page. Just want to give you a couple, and again, we'll try not to go word for word here, but in terms of strategies for you as a council, working with your staff to maintain and enhance those credit ratings. Again, during the budget cycle here, working on the capital planning, making sure we're complying with those financial policies that the city's had in place for a number of years, focusing on the pensions, and again, also making sure you're making those strategic investments in capital infrastructure. So you can't necessarily, from the rating agency standpoint, kind of sit on your hands and let the capital infrastructure deteriorate. Need to make those smart investments. That's something we've seen Moody's in particular focus on the last couple of years in terms of keeping up with your capital infrastructure. On the management side, again, talking about financial policy guidelines and responsible long-term financial planning and management.
And I would just point out, Mr. Mayor, members of council, that you are in compliance with those policies. You've done that, and you've consistently demonstrated that. The biggest challenge, perhaps, is the pension area, because I think it was one of the councilmen indicated it's the 80% that is expected of you ultimately, and that has always been the focus. And so again, to make sure that we do the things we have control over, and one of those is to continue to try to increase that over the next several years.
Absolutely.
Okay, we'll go to the next page. Okay, so we mentioned this a couple times. We'll show you a single slide here. We know Ms. Terry in terms of her role as the CFO. We'll continue to stress this through the budget cycle. But one of the primary factors within those rating agency criteria and a real strength of the city historically has been your fund balance and your reserves. It has helped to counterbalance some of the challenges that any local government has, as David just mentioned, the pension side. And so the fact that we have that very strong fund balance has again helped to make sure that we have continued strong credit ratings. So what we're showing here is just a couple simple graphs. If you want to look at the right-hand graph, your policy says that you'll have fund balance at least with that red line there at about 15%. You can see you've been above that line. That's a good thing. And again, given the overall situation and some of the other challenges to balance out, we wouldn't recommend in the short run that we draw down on that. but certainly it is helping to support the overall credit rating, especially as you work through these challenging economic times. So we just wanted to say a couple things about that.
And just to add, if you think about it, 15% is roughly about 2 months of operations. So that's sort of the way to think about this. And for all of us, when the COVID really hit, which was in March, if you think about it, we had about 3 months left in the fiscal year. So the idea here is that you always have at least a couple of months of operational cash to help mitigate unexpected surprises. Frankly, you were able to work against that and not see your fund balance drop because your staff and all of you did a good job in making sure that you stayed on top of your expenses. And as a result of that, you ended 2020 in a very solid year. So again, you moved very quickly as a staff to make sure that you adjusted accordingly.
Okay, I think as we go to the next page, we wanted to bring something to your attention. We don't need any specific action of council this evening, but as you know, each year, for members of council that have been on for a number of years, and maybe for newer members, as you adopt your annual operating budget, you also adopt a capital budget. And within that capital budget, any variety of projects all across the city that are funded basically with general fund dollars, again, to maintain that infrastructure, to improve the infrastructure. And those are what is encapsulated within that general fund capital budget. We are in a position now whereby, because rates are very, very favorable, and because the city has done a good job using the existing balances that it has, we are gearing up with your staff for the next planned bond issue in support of the general fund capital improvement program, largely to fund projects that have already been approved, meaning prior budget appropriations. And so we just want to bring that to your attention, Mr. Mayor, members of council. We don't need any specific action tonight, but there will be some actions that will be coming forward with respect to that. And we'll show you a time schedule on the next couple pages.
Talk about the refunding too, Kyle.
Yep, but again, there's a refunding here in the second bullet point. I think we actually may have a separate page on that. But given the very favorable interest rate environment, we've identified about 50 million. We've got there exactly 56 million. That could move a little bit as the market evolves, of existing debt that we think we can refinance for savings purposes without any extension, any final maturity, simply take a higher rate to a lower rate and try and take advantage of interest rates again while they're favorable. We'll be bringing additional information back to council, working closely with your staff to make that happen over the next roughly 60 plus, maybe 90 days. So I think on the next page. In terms of the next steps, we mentioned that we're obviously presenting with you this evening. We'll be working closely with your staff during the balance of January into February, really for a middle of March meeting to bring the various information back to council for the approvals that are required by virtue of the Public Finance Act. With that, we'd look to be in the marketplace the early part of April. Again, trying to secure those interest rates on both any new borrowing as well as refinancing while hopefully they hold. Should also note that this discussion here is all related to the general fund. Utility fund, meaning water and sewer, is separate and something that we're looking at with your staff as we speak. But none of this in terms of the refinancing, the new borrowing ties back to the general fund. A portion of this refinancing we expect will be helpful to the utility fund as we pull this all together. So really, you see there the time schedule, Mr. Mayor. We appreciate the opportunity, and that's our presentation. I'm happy to answer any questions that you or members of council may have.
Mr. Mayor,
Mayor, muted.
are you seeing me?
I am seeing you, Councilman Battle, but before I get to you, I just wanted to make a comment, and then we'll give you the floor, sir. I did want to say to you all, thank you for the presentation, and I'm excited about the information you've delivered. Also, looking forward to the refinance opportunity. It looks like if everything goes well, we'll be able to close it out before we adopt our new budget. So I'm excited about the opportunity to do that. Thanks again. And we will now open the floor for questions. And Councilmember Battle, you have the floor, sir.
Sir, you said that 15% was the fund balance. Well, what is the percentage of reserves needed to keep us strong in our credit rating?
So I would answer Councilman Battle, there's not one specific. However, with the credit levels of yours, which are again very high, we would like to see that level at least a 20% range, maybe 25%. It's not a specific actual, but it will be in that general range, Councilman.
Yeah, and I think one more point, Councilman, is the rating agencies, they're looking at that percentage, and they're also looking at the trajectory of it. So another way of saying we're at the current level now, if we started to draw that down and made that graph drop down, even if it was at a solid level, they would want to know and understand what the rationale was, and were we using one-time dollars to fund. So to David's point, it's not at a specific level, but it is a certain level plus the overall trajectory of it. That is
Ms. Finance Manager, what is the fund balance at this time?
Ms. Terry, are you available?
Yeah, I don't have it right here in front of me, but the current general fund balance was 79 million.
And the reserve?
That is the general, that's one and the same.
Yes, and to add to that, what Ms. Terry said, Councilman.
So are they the same, fund balance and reserve?
What it is, if you look on that, if we can go back to that graphic, we'll be helping you on that answer. If you go to page 11, if you don't mind. Okay. You'll notice on the left-hand side, folks, that the 2020 that Ms. Terry was talking about, we'll go round off here and say roughly $80 million. You'll notice that is total fund balance, also known as reserves. It's one and the same.
However, so they're one and the same.
Yes. However, there are three parts to that total fund balance.
Okay.
The part that we look at very specifically is the dark blue, which is that unassigned. And the reason for that is that the light blue and the sort of, I guess, reddish color, whatever you want to call it, there, that is really either committed or assigned, meaning, think of it this way, it's like if you're fortunate to have $100 in your checking account, but of that $100, 20 of those dollars are committed, or let's say later in the month to pay a bill, but the $80, let's say, is not committed. The not committed would be the unassigned, if that makes sense. And that's the number that we really hammer in on, as do the rating agencies, to make sure, because that is, as they say, unassigned, uncommitted, true rainy day savings.
Yeah.
Okay.
Thank you.
Thank you, sir. Do we have any more questions?
Yeah, Mr. Mayor.
Dr. Whitaker, you have the floor, sir.
Yeah, just to follow up on the chart on page 11, the figures there for the committed, assigned, unassigned, is that determined as of June 30th? Is that when that has to be in place?
Yes, sir. It is, Dr. Whitaker.
Right.
Yes, and that's per the auditors. And the reason they do that is there's only just one day of the year where they can basically take a look at a snapshot of any given government. And so that's what is done. That's sort of the generally accepted accounting principles, is to take the very last day of a fiscal year. And in your case, as in many cases for Virginia local governments, that's June 30th every year.
Okay, and so this term that is used, this rainy day fund, where is that in this graph?
So I would say the unassigned is what we mean by the rainy day fund. But part of that also, and the reason that number is there and is necessary to be there, is that if you think about it, local governments, the way they collect taxes and collect revenues versus how revenue expenditures go out every month is not even for any local government. As a result, a good portion of that unassigned balance is necessary throughout the fiscal year to help you pay bills during various periods of time until you get in, for example, certain state monies, or you get in your tax monies. And as a result of that, the purpose and part of having that rainy day fund or unassigned, again, one and the same, is so that you don't have to do something that you used to do many years ago, which is go to the local bank and borrow to make payroll. That's something that we don't want to see you do, because that's just expensive and costs you money. So that's part of where that money is, Dr. Whitaker.
Yeah. I ask that because a lot of times when I think citizens, and I know they watch, when they hear these terms, rainy day fund, they have the impression that these funds are actually sitting there available, but this is more of a paper transaction that is monitored as of June 30th.
Yes, sir.
Okay, right. And then I had a couple other questions. The 56 million that you've identified as outstanding debt that can be possibly refinanced, do we have any idea of what a ballpark savings that we're expecting to see? And I heard the mayor say that it's possible that this is going to happen before our budget is finalized.
Yes, sir. Dr. Whitaker, we would expect that's going to be likely at least 2 million in that range. If we can capture a good marketplace, which again, we don't control, you don't control, but we're trying to move this quickly, it could be a multiple of that. And so again, realized over time, but several $1 million, I think at least 2, and could be much more substantial than that, depending on where rates actually are when we go price the bonds.
Okay, and then my last question, on page 8 of your presentation, where you have the commentary by Standard & Poor's, page 8.
Yes, sir.
Right. So the upside scenario is a commentary here that's pretty interesting. I wanted you to just elaborate. It says, if continued economic development in the area leads to improved wealth and income levels. Can you elaborate when it's talking about, is it connecting economic development to individual wealth and individual income levels improving?
It is. It is. In part, it is saying that if there are additional businesses or existing businesses that are able to enhance the income levels of your citizens, that is something that directly allows your citizens then to have a better safety net. It also allows them, hopefully, to, let's say, purchase things that they need. It helps them as well buffer when, let's say, inflation comes back. And so if all those things happen, then that's what they mean by improved wealth levels. Yes, sir.
Right. So as you advise our finance department and they present policy to us, it would be beneficial, I would think, that you would start recommending policies for us to adopt, ordinances for us to adopt, as we start looking at economic development and tying it to wealth and income level improvements.
We would be delighted to do that, Dr. Whitaker. We find ourselves doing that sometimes right up front when an economic development project is presented to a local government. And we are part of the evaluation committee to decide if it's something that net is a good use, let's say, of the city. For example, that, again, some sort of business wants to come in. If the business wants certain, they want certain things from the city. If they do, that's an opportunity then for all of us to say, is that business prepared to pay the kinds of wages that would make sense to have that business in the city of Portsmouth or any other place? And so part of all that can help towards what you're talking about. And you certainly can then look at that business as a council and decide if it's worth it for you to make certain investments, should they ask for it. Obviously, as you well know, there's certain businesses that come that ask for nothing, and you have no control, if you would, over what they do. But if we're talking about the type of businesses that could move the needle, typically those are the kinds of businesses that are looking for some sort of considerations from a local government.
Right. Well, I thought that information was very on point, particularly with the high poverty that we have in our city, and that we as a council need to remember this statement that is made here as we start approving projects. But thank you.
Yes, sir. Thank you.
Are there any other questions from our colleagues?
Yes, Mr. Mayor, I have one question.
Yes, yes. Councilwoman Lisa Lucas-Burke. Yes.
Yes,
You have
thank
the floor.
you, sir. Sir, thank you all for this presentation. It has been quite enlightening. On that same slide where the key credit rating drivers were listed, I guess looking now at the downside, we're in the process of, switching our management over, and just want to know that if the economy, takes a dip, we have no control over that, and our management changes and some things with that don't follow the plan or lean to weak budgetary policies. Are these other, I guess what I'm saying is, are these credit rating drivers able to help balance us out in any way or fashion?
Well, these credit ratings are, I think, in some ways indicators that maybe things are not being done under what we like to call best practices. But I do think, and one of the things that Kyle mentioned is management. What we're doing tonight is the type of thing the rating agencies look very positively on. And that is that you are considered, by the way, as council, part and parcel of management. It's not just the staff, it's y'all as well. And so by all of us having this kind of meeting and talking about these types of things, they look at that positively, because now you and your colleagues are that much more in tune with what the national outside independent rating folks are expecting from a highly rated local government. So our discussion of like this minimizes the chance that at budget time, someone can say, I didn't realize having a good fund balance was important. I didn't realize that we should have structurally balanced budgets. You're now sophisticated, and you've been sophisticated enough to realize this going into that. I know I've been in front of you before,
Right.
and y'all know that. So you've been doing it. And we just like to see you continue to do it. And then as Dr. Whitaker pointed out, as economic development and other things occur, to be that much more sensitive to maybe ways to continue to be even stronger by even asking those questions about an economic development prospect or other things. And we just wanted to today, I hope we did the right thing, Mr. Mayor and members of council, by just educating you on some of these things. That's all we really wanted to do.
Great. Thank you. Good information.
Well, are there any other questions from my colleagues? Well, I just want,
I had a question, Mr. Mayor.
okay, Councilmember Battle, you have the floor.
So, sir, what you have done with us today is gone over the greatest shortfall or red thumb that as a city that we are being a little behind the eight ball on. So you're saying that our retirement system is the only red thumb that you see in the operations that would keep us in strong suit of a wonderful credit rating?
I would say a little differently, Councilman.
But is that true, what I said?
Yes.
Is it true?
I would say
that's the only thing that you see?
No, sir. Let me say this.
But is that a concern?
That is one particular challenge.
Okay, that's all I wanted to know. Thank you, sir.
But I'd also point out that the poverty level is such that it is higher. Well, any poverty is unacceptable. But the fact is that the poverty level in the city of Portsmouth, like my city, Richmond, is higher than we'd like to see it. And as a result of that, to the extent that we can have policies and we can do things that allow that, or not allow that, to try to mitigate that, then that also will be critical for the city's sustainability.
Thank you very much. And if I could, Councilmember Woodard, you have the floor, sir. Councilmember
Hey, how you doing?
Woodard,
I'm on. Am I on?
you have the floor, sir.
Okay, how you doing? I think Councilmember Battle kind of answered my question, but I know in your presentation you said that we were 2 notches down from possibly looking like a what was it, AA, not a perfect score, but in great credit standing with the city. Yeah, I was trying to figure out what exactly you think was the problem, but Councilmember Battle did address the pension, and Councilmember Whitaker has addressed the economic development correlation to, I guess, wealth in the city. So yeah, I was definitely trying to figure out what exactly is keeping us from that great standing in our credit.
Well, thank you for those comments. Are there any other comments? Well, on behalf of all of my colleagues on council, I want to thank you all for an uplifting report. It looks like we're doing a lot of good things here in the city of Portsmouth. Kudos to our management team, our interim city manager, our CFO and her team, and all who are working real hard to ensure that we have a strong fund balance, that our practices are sound, and that we are all in this making sure that we have a strong credit rating that will allow us to move Portsmouth forward. So thank you.
Thank you. Be healthy.
Mr. Pace?
Yes, sir. Mayor, Vice Mayor, and members of City Council, we have reached the last presentation of this evening. Mr. Nestor Mangubat, our Fire Chief, will join us for a presentation from the Portsmouth Fire, Rescue, and Emergency Services Department.
Thank you, Mr. Pace. Mayor Glover, Vice Mayor Barnes, and members of council. Thank you. I'm delighted to be here this evening, and I promise you this will be your quickest presentation tonight. So with that, for the council members that I have not met yet, my name is Nestor Mangabat, and I wish congratulations to you on winning your council seats, and welcome. So with that, I'm truly honored to be the fire chief for the city of Portsmouth. I have been leading this department since April, and I was appointed as the fire chief in July. And I'm really excited to present to you some of our outcomes and accomplishments, and we'll move on to the next slide, please. Okay, so our mission is, it's always good to begin with our mission because most everybody sees us for our big red trucks and the flashy lights and sirens that go down the road. But I just wanted to share that the Fire, Rescue, and Emergency Services has a very large mission within the city. And that comes along with disaster management, emergency medical services, which is probably our largest call volume, fire and medical prevention, fire suppression, hazardous materials management, public safety, emergency management, which I will really go into detail on how we've played a role in the pandemic, and along with the Emergency Communication Center, which we'll discuss as we accepted the position to monitor this from the administrative standpoint from the police department back in 2019. Next slide, please. Okay, so the COVID-19 response has been affecting all of the departments, the entire city, basically the whole world. But what I wanted to do was at least show that the perspective from the department is that it's almost been a year since we started our planning. There was talk about this mysterious corona-related pneumonia that was over in China, and then there was talk about the airline industry looking at screening patients. So what we did was took a little bit of experience from the other pandemics, and we started ordering respirators. And as that went on, we made sure that all of our personnel were equipped as this pandemic progressed. So we had some procedural changes. We started out with making sure we were protecting our personnel. In dispatch, they were screening callers to make sure that if they had symptoms of the coronavirus, that we would make sure our personnel were ready and wearing their gowns and masks as they approached the scene. We also made some changes as far as making sure that our personnel, we didn't expose too many personnel at one time. So we would send 1 or 2 people in the house with the patient and quickly do an assessment and remove the patient from the house as quickly as possible so we wouldn't be in that confined space. So over, since March, we've transported over 1,028 patients with COVID-like symptoms, and a great number of them have tested positive. So our protection measures were definitely of some value. When it came to PPE and making sure that the city as a whole, with all of the frontline and important departments that had to stay running, we made sure that we put a plan together with the finance department, our CFO, just to make sure that we weren't duplicating the effort, ordering too many supplies at once, and making sure that it was a just-in-time type of logistics system. So that played out to be really well, and we were able to maintain a good fiscal management from that standpoint. Where we are today is with the COVID-19 vaccine planning and distribution. Just today, we finished up our Group 1A, which is some of the nurses and firefighters and paramedics. And as we move over to Group 1B, it appears that we'll be starting sometime around January 25th. So we're moving along, and hopefully, if we receive enough vaccine within the city, we'll be able to take 1B and 1C together and really push this effort for the vaccinations really fast. We've really partnered with the health department through this whole pandemic. We've had 20 of our paramedics who were trained to be vaccinators, and we really look forward to helping out the health department and getting into some of the public vaccination process from our department and along with the health department. The public schools early on, they donated a bunch of cleaning supplies. So right off the bat, when schools went into the virtual mode, they had a lot of disinfectant wipes and cleaning supplies that they donated to us, which really helped us out with getting the fire stations cleaned and some of our other city buildings equipped with this cleaning equipment. Next slide, please. Okay, emergency management. So typically, emergency management is always looked at as being something for the storms or the hurricanes and floods. But emergency management has really progressed further into being a true interface internally and externally with the entities such as FEMA and the Virginia Department of Emergency Management. The office is much like a project management team. If there's something that needs to be organized and planned within our scope of response and recovery, especially internal of the city, the emergency management group will be there to do that. Emergency management continues to work with the health department, and they also assisted with the COVID-19 testing, whether it was with the faith-based locations, along with the Virginia National Guard testing sites. We also assisted with the distribution of 20,000 masks and hand sanitizer bottles for the vulnerable populations. This was through the Health and Equity Working Group with the Governor Northam's office, and this was very successful in getting these supplies out to those that truly needed them. And also the vaccine distribution continues. So emergency management really is functions off of grants. And every year we have a non-competitive grant that we match with our salary for the deputy coordinator. And this is what keeps emergency management going throughout the budget year. Along with an additional grant, back in November, Council appropriated a $49,000 grant. This is a supplemental grant that is earmarked through the Health Equity Group, and this will continue our ability to provide the services along with the health department to our vulnerable populations. As far as the communications and collaborations, we continue to communicate with the state agencies and maintain the communication through to the city manager's office to make sure, regardless of any threat or any issues with the pandemic, everyone is kept apprised of the most current information. So emergency management will continue as their specialty with the team aspect. Also, we will assist in the FEMA funding process if we have to look at any type of FEMA reimbursements. And lastly, within the emergency management, we pretty much organize and facilitate training exercises. And some of these training exercises are either citywide or with other localities, the shipyard, the hospitals, and also along with the Naval Hospital next door. Next slide, please. Okay, some highlights. I didn't want to hit you with a bunch of static statistics, so I just wanted to give you some outcomes. So when it comes to our mission, as far as life and health from the medical standpoint, we have a set of key performance indicators that we track, and we also send over to the American Heart Association. And with that, this shows our ability to recognize patients who are having heart attacks, and it shows how our treatment and our ability to notify the hospital to get the patient to the right care is a life-saving process. So with the EMS revenues back in FY18, I came here as a deputy chief, and just a quick overview to look at the financial processes within the department. One of the areas that I knew that we could improve was within EMS revenues. And when we did our last business report, It showed that some of the processes that we put in place from FY18, FY19 to show an improvement. And you see 2 million to 2.2 million. And some will say that, well, you had an increase in calls. And in reality, the increase in calls is very minor in comparison. But what we did was we looked into the business practice of billing. We have a great billing process manager here, and Regina Humphrey. So we have really drilled down into making sure that we find all of the bills that come through, make sure they are ready for billing, and make sure they are billable. And just from the internal process of these billings, we were able to realize some positive revenues on that end. So from the other standpoint, we look at non-competitive and competitive grants to help fund the fire department processes and obtain supplies. The continuation of trying to raise our hand to ask for other general fund dollars really, to us, is not a sustainable effort. It doesn't play into the entire role for the entire city. So we make sure that we go out and seek grants. And this past fiscal year, we've had $1.5 million in grants that we had to manage through the system. One of the large portions of that $1.5 million grant is that respiratory protection equipment upgrade, and it is implemented. We implemented it just in the calendar year 20. And that was about $630,000, which was a grant from the federal government. We matched 10% of that, which was $63,000. And then we added some other non-competitive grant funding to complete the entire project, which will sustain us for at least 10 years. Emergency medical technology, we try our best to make sure that we give our citizens the best care that we can. So we've taken some non-competitive grant funds and upgraded some pediatric software so we can treat pediatric patients a lot quicker without very little hesitation when it comes to drug administration and the proper procedures for them. Along with that, we introduced some video advanced airway as a video camera that helps us put an advanced airway into patients of need. And that if we can get the oxygen into the body of a person, the quicker we can save the person's life. So as we move through this past year, one of our biggest accomplishments was we were able to put together a response plan and test it with the Virginia Port Authority on an active threat. And we continue to do this with the police department along with emergency management. And we just met with Dr. Bracey's team. Dr. Simmons will be working with us, and we're going to assist them with their emergency planning and continue to build that relationship to move forward. On the staffing part, we've graduated our 16 graduates this past November. And then from July to about November 30th, working with HR, we were able to put in an expedited process for hiring. And we hired 15 new firefighter recruits, and they were in the classroom on December 1st. So that was a very large accomplishment. Also, with the downturn from the pandemic, we took advantage of some recruitment efforts, and we were able to hire 11 new paramedics and brought them into the system also. Next slide, please. Okay, so the Emergency Communication Center. We assumed the roles of administrative oversight in July 2019, and we were hoping just to make this service much better for our citizens. And I am pleased to share some good information just from some leadership changes. We look at this busy system that we have, about 201,000 calls that are processed. This was last calendar year. If you put that in a comparison, Norfolk and Chesapeake, who have over double the population, their numbers for call processing are about 320 to about 370,000 calls. So we have some dispatchers that truly are working and answering these calls for our citizens. A couple of projects that we worked on with the Department of Information Technology. We are on the new P25 radio system, and the radios are clear as a telephone call. And we have made a lot of progress in that area for communications on the emergency scenes. We look for improving the Emergency Communication Center, not with just adding a bunch of people to the system, but leveraging technology. We were awarded a grant for emergency medical dispatch software at that $70,000, where we had matched, or Department of Information Technology also matched it with $70,000. So this is the $140,000 project that will aid in when a citizen calls. We will be able to give some emergency medical instructions to help with that care of our loved ones. And it will provide a little bit of extra care, especially if someone goes into cardiac arrest, to give instructions on how to handle that patient with some CPR, and then we can continue that care once we arrive. The other software upgrade that we put in place is a automated alarm software. And what this does is that we have about a little over 50,000 alarm calls that come into the system where a dispatcher has to answer that phone call. Well, what we do is we take the software, leverage the software, and the software will receive the call from the alarm company, and that alarm will be processed through our dispatch software with a very seamless way to where the dispatcher will not have to take the call and take the information. So we're going to continue to find these efficiencies in the Emergency Communication Center. We really are pushing the recruitment and retention to fill the vacancies in the Emergency Communication Center. But when we look back at 2018's performance on answering calls within 10 seconds and 15 seconds, you can see we have made some great accomplishments with where we are today, from 77% to 85% with 10-second calls, and we've gone from 84% with a little bit of increase to the 90% on the 15-second calls. Next slide, please. Okay, so what are our initiatives for 2021? Health, wellness, and safety are really the key components to making sure that we have a sustainable workforce. So we want to make sure that we look at cancer, emotional wellness, and PTSD, make sure they are controlled within the environment. We want to make sure that we have personnel adjustments, such as safeguards, like Council has duly supported the 2 sets of turnout gear. We're going to look at fitness, nutrition, sleep habits, and the goal was really to provide education policies and the ability for self-care to minimize that risk within the organization. Leadership development. I come from a big leadership background, and this is the way we're really going to succeed and move on into the future through a true succession planning. We just have to grow our leaders. We're going to prioritize in-service leadership training this year, and we're going to hope to see more improvements and outcomes from this department. Recruitment and retention is a must for a healthy organization. We have to position ourselves to replace the ones we lose as soon as possible, and also retain the ones we have. So we're definitely going to focus on that. Our fiscal strategy, we've been talking about fiscal responsibility all night, and I do want to share from the department standpoint that we will continue to seek grant opportunities to bolster the general fund that supports this department.
Excuse me, Chief.
Yes, sir.
This is Mayor Glover. We're running short on time in the interest of continuing our meeting, because we have some folks waiting to speak beginning at 7. So if we could wrap it up and close it out, I would greatly appreciate it. Okay,
no problem. All right, last slide. Okay, Thank you. All right. So I just want to close with our vision. We are here to cultivate a diverse and modern, innovative and caring and compassionate department. So we have to put that into play. So like I said, prioritizing the recruitment and retention of our dispatchers, our firefighters, paramedics, and staff support. We're going to continue with modern leadership practices. I like the corporate governance-like organization. It's all about accountability. You hold us accountable, the citizens hold us accountable, and we're going to make sure that we are accountable to everybody. We'll run through continuous improvement. We will continue with leadership of fairness and equity to make sure everyone has that right opportunity to provide a good personal growth and professional growth. We'll monitor the fiscal environment, and I tell you what, we can't do it without our partners. We're going to continue to work with human resources and the CFO. And that concludes my presentation.
Thank you, Chief Mangabat.
Yes, sir. Thank you.
And in the interest of time, if I would ask my colleagues on council to provide a consensus to move the last two items to our regular agenda at the council meeting, to move our city liaisons discussion under boards and commissions, and move our city attorney / manager positions under items submitted by council, and also to get consensus for a business meeting retreat. Can I get a show of hands and a consensus of council so that we can move this forward, please? Thank you. With that in mind, we'll go ahead and close out this public work session. I will take a 3-minute recess before we start the regular council meeting. This meeting is adjourned.